Talk to me about the implications for supply and for pricing, and how much has the market priced in already? Is there any flexibility going forward in undoing parts of this announcement?
No, I think this is a done deal. Once the U.S. sanctions come into place, there is a procedure. The procedure is that within 90 days, certain sanctions come back, but there are minor ones, such as access to the U.S. dollars or lack of ability to import certain metals into Iran. But the key is 180 days between today and November 5, 2018. Business as usual. Everybody will do everything as is. Between November 5, 2018 and May 5 or 4, 2019, everybody who has imported the volume in this 6 months have to cut back in the next 6 months. Is it going to be cut back to the 1 million barrels per day total number for Iran as before? This is not decided. But there will be somewhere between most probably 1.5 million barrels per day removal of the Iranian oil and condensate from the market. So significant impact by the end of the year and in 2019.
What do you expect the reaction within other OPEC members to be?
Well, the reaction for them is that the key actor is Saudi Arabia. Saudi's already said, we will do what we need to do to balance the market. The signal for that is that the Iranian oil lost, we will replace. The problem is that the spare capacity in OPEC is so small that if the Saudis want to replace all the Iranian oil lost, they would be at their theoretical maximum capacity without debottlenecking. So it will be pushing the prices up in the $90, $100 range. And OPEC has to decide in June whether they want to relax the production cuts or they continue as is. But we are looking at the upside significantly.
Mr. Fesharaki, yes, as you mentioned, 90 to 100 US dollars on a barrel per oil. I was actually going to ask you that. Do you think this pushes forward timetables of when we expect the market to be balanced, or does it balance first, and then when these sanctions do kick in, as you mentioned, early 2019, we fall back into a glut?
Actually, the market has already balanced. The market is tight, but the market is tight because OPEC is holding back, together with non-OPEC 1.8 to 2 million barrels per day. If they put that back in the market is not tight. So as the Iranian production begins to phase out and exports become less by the end of the year, then the tightness in the market will be very severe. So if OPEC continues the production cutbacks, we will have $90, $100 oil. If OPEC relaxes that, then we could be back at the $75, $85 range. But all the risks in the short term are on the upside. If there's a problem in Libya, Nigeria, Venezuela, it's all another factor of pushing the prices up.
And in terms of reaction from the buyers here, what do you think Europe's going to say? China, India, to a lesser extent, of course, for those two, because in recent years, those have evolved to become big buyers of Iranian oil.
Right. I mean, what is different this time around from last time is that last time around, the Europeans had their own sanctions. So imports from Iran was zero. Now the Europeans are importing 600,000 barrels per day. I think that there is no scenario that anybody is going to fight the U.S. sanctions. Everybody will obey. They grumble, they moan, but they will obey. And everybody would have to cut anywhere between 20 to 30% back from what they're importing. This basically means that as the Europeans would have to sacrifice some volume, but they still have 300,000 barrels per day imports that they can go through, the share from Asia would have to decline. And some buyers in Asia would be more affected than the others.
Fereidun, does this essentially threaten to create more destabilization in the region?
Well, yes, indeed it would. But, you know, when President Trump says that we're looking for a new deal, he's actually looking for a regime change in Iran. So if the new deal without Iran giving up everything that they stand for is not possible. So I think that if you have a destabilization which will come from the economic parts in Iran, and the U.S. government thinks that the Achilles heel for Iran is the Iranian economy, and I think correctly they feel like that. So the destabilization of the economy would mean that the Iranians would lash out militarily and restart their enrichment program for them to have a lever to bargain for their own survival.